Just getting the latest snapshot of China's economic growth, John. 7.7%, pretty comfortable, but not the runaway growth we once had.
Yeah, I mean, this is the slowest growth that China's reported annually since 1999, but still, it's pretty strong. They've beaten their target by a couple of percentage points. And the key thing is that when China has a stable to strong economy and the renminbi looks as cheap as it does, we're going to see a strong return to inflows, people trying to get money into the country any way they can to profit from the higher returns that China offers compared to the rest of the world.
High returns maybe and pumping money into China, but the stock market looks dismal, so where's all this money going to go?
Where the money's going is the trillion-dollar question for China. I think a lot of it is going into property. You can see that the property investment figures have gone up quite strongly, about 20% in 2013. And actually, the property sales for 2013 were also up strongly, about 27%. And prices are rising in places like Beijing, Shanghai, Guangzhou, again, 20%. So if you can get your money into the country, that 20%, if you really believe that it is 20%, is way better than you're going to get investing in government bonds or even equities in most other parts of the world.
But a bubbly property market, that is something that the government is probably not too keen on. Plus, we have concerns about volatility of hot inflows and hot money. That's not something that Beijing really wants, is it?
Yeah, China's economic planners are going to have a bit of a dilemma this year because there will be continued pressure, inflows coming into the country, not necessarily going to places where the PBOC would like it to. For example, it will continue to push up property bubbles. But it's very hard to deter those inflows without also crushing economic growth, because growth, 7.7%, it's okay, but it's not strong enough that you can afford to turn investors away at this stage. So how the PBOC handles inflows over the next 12 months is going to be one of the big macro stories for China.
Okay, a big macro story. And meanwhile, we're thinking about what's the key challenge for China this year.
The key challenge for China in 2014 is going to be debt, levels of which are high and rising. How to make sure the economy grows faster than indebtedness is going to be a big problem, because local governments, SOEs, basically everyone has got the hang of growing by fueling themselves with increasingly high levels of leverage. Can they do it? I don't know. That's going to be the big question for the next 12 months.
So comfortable growth, but watch out for those debt figures this year.